Hey, you have Patrick Findaro here, co-founder at Vetted Biz. Today I'm going to go through a pretty interesting compensation plan for those franchisees or prospective franchisees that are really looking to align the incentives, particularly with their general manager, with the owner. So back in the 90s, Outback Steakhouse really revolutionized aligning the incentives of restaurant managers together with the corporation, the parent company. How did they do this? They took a pretty unique approach and they saw the existing industry was not working. Restaurant managers would stay for as little as 6 months on average before going on to another restaurant in the same chain or leaving to another restaurant outside that corporation. That inefficiency and training the general manager and having a new general manager come in and not knowing the employees causes a lot of issues that ultimately affect the bottom line. So Outback incorporated a pretty interesting strategy to increase the tenor by 10 to 20 times. Now, how did they do that? They asked the general manager to actually invest $25,000 in the store and have a commitment of 5 years where they're going to be growing that store's not only sales, but also the profitability of that restaurant location. And then after 5 years, they can continue in that restaurant, or they can move on to another restaurant, or potentially go on to manage multiple Outback Steakhouse restaurants. And the average manager went from making $60,000, $70,000 to $120,000 a year, as they were able to participate in 10% of the free cash flow that Outback Steakhouse restaurant was making. Also, they were awarded stock options in Outback Steakhouse, the publicly traded company. So it was really a win-win for the restaurant manager, Outback Steakhouse corporate, the shareholders of Outback Steakhouse corporate, and everyone that really wanted to drive sales, open up more locations, but not forget about the locations that Outback had previously opened up, and really ensure that the top line revenue continued to increase alongside with the operating profit, and really incentivizing that general manager to take ownership in the business. And the proof is in the pudding, where the general managers of Outback Steakhouse spent 10 times as much time as the average general manager in their restaurants. And with that, Outback Steakhouse has been able to grow quite a lot. Even internationally, they have some markets where they're doing billions of dollars in sales. And that has really propelled them to be the business that they are now and really a leader in the restaurant space. Other businesses that have pretty interesting compensation packages would be Chick-Fil-A, where the franchisee partner, basically the general manager, is investing $10,000 and they're going to have 50% of the profits. So a general manager that might be making 80, 90K can invest $10,000 and really take part ownership in that Chick-fil-A restaurant and start making $200,000, $300,000, as the unit volume of a Chick-fil-A is nearly $5 million with a very healthy profit margin. Another one, Steak and Shake, which they have kind of mimicked the Chick-fil-A plan, where again it's $10,000 and an ownership split, where these three models, whether it's Outback Steakhouse, Chick-fil-A, and Steak and Shake, they ask for an investment from the manager, which not many restaurants are willing to even engage in that conversation. And many managers might not be willing to make that upfront investment, or they might not have the capital. So if your key employee or key manager does not have the capital to make that investment, you might want to think about a loan or some other financing mechanism so you can really get your top employees to feel a vested interest investment into the business that ultimately they're going to be really responsible for what the results are like. I hope you found this video informational. It's geared more towards existing franchisees, but prospective franchisees need to have this in mind, as when you go to set up your business, ultimately it's you, the owner, that's going to be driving the compensation and culture of the business with the oversight of the franchisor. But there is generally some options, and you can get a bit creative with the compensation packages so you can best align the money you make with the money that the managers and the employees making. Thanks.